So hard money, what is it? Who uses it? Where do you find it? And why do investors first come to hard money to actually make their real estate profits?
Money, 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 hard money, Mike. Money for real estate investing. Let's make money, 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 money. HardMoneyMike.com.
So if you're a real estate investor, you've come across, seen, probably borrowed from, or at least thinking about using hard money. So today what I really want to do, since we've been in business 20 years, we have at least half of the people who call us still trying to figure out the money side of probably at least half the investors who call us. They're still trying to figure out the money side. What are the differences? Where does hard money fit? And where should you actually look for maybe a bank loan or something else? So today we're going to go over what is hard money, some of the key terms, information you will need to know just to become hard money proficient. So, because it's going to be something you really need as a real estate investor. So what is hard money? It is what most of investors will use at least once in their life. It's what we consider easier money than bank loans. On the other side, it's going to be a little more costly, but hard money is made for real estate investors because it's focused on lending on properties that need rehab, that need work, that are maybe undervalued, so you could use that value you're creating to do the loan. So it is money made for real estate. The biggest key to hard money is how fast it is. So real estate investors who are looking to close on a deal fast, to take advantage of someone who needs to sell a property, not take advantage, but take advantage of a situation where someone needs to sell quick and they're going to give you a discount for doing that. That's where hard money comes into play. So it doesn't matter if you're new to investing or you're a seasoned real estate investor, sometimes you just need fast money, and both come to hard money. So hard money is going to be a little bit more expensive than banks as far as interest rates and maybe points. But a lot of people make that up on being able to close something fast and getting a better deal. So hard money, like I said, is a real estate loan. It's typically a short-term loan, like 6 months to maybe a year. And it's made to help you buy a property and fix it up and sell it, or buy a property, fix it up, and keep it with a traditional long-term loan. So hard money is made for real estate investors that want to and need to close quick, and maybe don't have the experience, the credit, and everything else like that. But it is a loan and secured by your property that you're about to buy. So how does hard money work? What do hard money lenders look at? So a few of the things that you have to understand in real estate investing, if it's with hard money or banks, is terms like loan to value, which is the loan. Like, let's just say you have property in the current value, the current appraisal, whatever, is $200,000, and you have a loan for $100,000. That means your loan to value is 50%, because your loan is 50% of what the value is. So the other key that hard money looks at a lot is what they call ARV, or after repair value. So almost all investors are buying value add properties. So they're buying something that is undervalued, needs work, and is then going to be brought up to the standards of the community where it is now. So what lenders look at is, what can that property actually be once it's fixed up? And a lot of loans are not only based on loan to value, but you'll also hear after repair value. So a lender may go like, we'll lend you up to 75%, not of what you're buying it for, but what the after repair value is. So hard money is all, it's quick loans, fast loans, but it's there to build value into real estate that you can then sell or refinance into something else. So it's really focused on the loan to values and the ARVs of the properties that you're looking at as a real estate investor. So hard money lender, like hard money loans, another key factum is not only will they usually lend for the purchase, but they'll also lend for the fix-up, or called escrows. So they'll put money aside as you do work that the contractors, anybody, can be paid for. So hard money, will also do the purchase and it'll do the rehab. So in a lot of cases with 10%, sometimes even zero money in, you could buy a property, fix it up with a hard money loan, and then be able to, like I said, sell it as a fix and flip, or actually keep it as, call it a BRRRR or whatever it is, and get it into a long-term loan. So hard money is, not only fast, convenient, but it's also something that allows you to get the money to add that value. Now, hard money does come at a different cost. So how does hard money differ from other lenders? So what you're going to find is typically your interest rates on hard money, is somewhere between 2 and 5% higher than you will find at banks. And you may also find that their fees are about 2 times what you'll find at banks, their origination. The appraisals would be about the same in processing, but origination might be a little bit higher. So you're going to find that when you look at something on paper, the rates are higher, points are higher, so it looks like it could cost you more. And in a lot of cases, it does cost you more, but you're paying for the convenience, the quickness. But what we see, for an example, is one of our clients who was able to buy a property, and he saved 10% on the property because he could close faster than any of the other 5 people bidding on it. So he saved 30 grand just on the purchase. That was more than twice what he'll spend on all the interest and all the points on the transaction itself. So sometimes, even though hard money seems like it's costing you more, when investors use it right, it actually costs them less because they actually get the deal and they get it at a better price than with a traditional bank that's going to take 25, 30 days to close. And a lot of sellers who are selling at a discount don't want to wait that long. So how do you qualify for a hard money loan, and do they require a minimum credit score? Now, most hard money lenders that are national, so there's 2 different categories of hard money lenders. There's national lenders who lend in almost every state. They're backed by hedge funds and private equity and stuff like that. They do require a credit score. Typically, they're looking also for people who have experience. Their average is 5 deals in the last 3 years, so if you have experience. And they're looking for specific properties in larger communities. So they're looking for experience, credit scores, and in larger communities. If you don't fit in that box and you maybe have the credit score is not where it needs to be, or it's a little bit lower, that's where you look for what you're looking for is a local or private lender in your area that just does your state or your area. They're not looking at credit scores. They may look at your credit to make sure you're paying people. They're not going to look at your credit score. They may or may not need experience, but they're really focused on the deal and do they think there's good value in the deal. And most local private money lenders will also lend in rural areas where the national people just don't want to be. So if you're looking for lenders and you're basing it, like on qualifications and what they're looking for, you just need to know the difference between national and local hard money lenders because they're going to be different. You always need to shop, look and see what fits your ideal situation now and what will fit you in the future as you grow too. So another question that always comes up, are private lenders, hard money lenders, better than banks? And the answer is, as I said before, yes and no. Just depends on your deal, just depends on where you're at in your investment, life cycle. Like if you're new, it's going to be a lot easier to get a hard money loan than a bank loan unless you have a great job, W-2'd, and you qualify without anything else. So number one, hard money is made for investors. It focuses on investors, and you don't have to have all the experience to actually, get involved. You don't have to be in business 2 years. You don't have to actually have the income as long as the property has the income that goes with it. Hard money is also faster. So if you're looking to close a deal and get a great, have an opportunity to get a great deal on a property, hard money is the way to go. If you have more time, if you have that, 3 to 4 weeks to close, a bank may be better because their rates are going to be lower. Their points are going to be lower. But hard money makes it up in speed because if you could close something fast and get a better deal, typically that savings on the deal will more than pay for all your interests with the hard money, all your points and all that stuff. So depends on the time, depends on the property, depends on what you're looking for if hard money is better than banks. But I think, as we always say, is you should always have a mix. You should always have some, lenders, some banks, some traditional lenders. You should have hard money. You should have OPM. You should have all of these things working for you as a real estate investor, especially as you start out. You may have to start out in hard money and then want to work to banks and some other opportunities that are out there. But you just have to understand what hard money is, where it works, and where it doesn't work, where it's not ideal for you. So after 20 plus years of working with thousands of investors, the one thing we know, especially with the new investors, is all this money talk, all these different options are sometimes confusing. So what we're trying to do here is bring some information. We have some other videos out here that go through different examples, scenarios, maybe it's BRRRR, anything else like that. So if you have a chance, please subscribe, please share these videos, and also just comment or send us a message on kind of the information you're looking for, how we could help you become money wise, because we understand if you get control of the money, if you understand the money, if you put the time into the money and the credit, it'll help you like 3x, 4x your investment career, your investment business, because money is the key to all of this. If you don't have the money to buy the deals, what does it matter if you find the deals? So we want to make sure you have the money, you're money educated, and like I said, subscribe, like, share this, and as I always say, happy investing.